Well, good Monday morning. Thanks for joining us here today. I'm Marlon Bowling, your tour guide to the ag commodities. Well, it's always nice to visit with you about our ag commodities, even if they're not all higher today. In fact, everything was pretty much on the downside overnight in the ag trade. And here to help discuss what's going on, I want to welcome aboard Brian Hoops of Midwest Market Solutions. And he is based in Springfield, Missouri. Right off the top here, Brian, I'm hearing all kinds of varying reports for moisture over the weekend from all parts of the plains and the Midwest and the northern plains. How did you come out in that part of the country?
Good morning, Marlon. Yeah, it was a good weekend, beautiful weather, a little bit of rain overnight, but more rain in the forecast this entire week for our area. And I talked with producers last night during the trading hours. A lot of them got done corn over the weekend. They ran all night if they had to try and get the crop in the ground before some of these rain showers that you mentioned hit their area. So, well, you know, we maybe have seen a lot of producers make some really good progress. There's still some areas that too saturated to get a lot done. But, you know, there's more rain in the forecast this week that's going to be kind of a hindrance for getting the crop seeded. And of course, crop progress and conditions out this afternoon, that will give us kind of an update here of what the USDA thinks that we've done or as far as accomplishments, but no doubt we'll be behind last year's pace and the 5-year average for corn, soybean, and spring wheat seedings.
Is that why we're seeing the weakness on the corn market overnight? July corn is down 8 at 805.5, and you had December going down 8.5 cents here this morning.
Yeah, I think that is a big part of it. You know, we actually were called a little bit higher last night and gap lower. So follow through selling real poor technical close on Friday, plus maybe ideas that maybe some of these producers were able to get more done than what was expected. Plus you had the crude oil market really crashing here. You know, we're over $3 lower this morning. And that is, you know, a little bit of a negative factor. Some of these outside markets a little bit negative for grain values. But underneath the market should be good buying support, good buying interest because of the overall slow planning pace given the industry this year.
Now, looking at the soybean trade here overnight, we had that July contract down 13.5 cents, Brian, at 16.71 and our quotes provided by Bar Chart are showing the new crop November contract at 15.05, and that was down 9 3/4 cents overnight. And checking out our wheat trade, now in Chicago wheat, you had the July going down 9 3/4 at 10.46. Now let's take a look at this Kansas City market here, the hard red wheat, and they did receive some moisture in some areas. I have to use the word some. It was not all encompassing, but it looks like they're getting some this morning. July KC wheat down 11 at 10.94 3/4. And let's take a look at the spring wheat trade overnight. Here you have the July contract just 2 lower at 11.64. What about the cotton market overnight? Well, let's take a peek over there. On the cotton, you had July up 211 points at 147.74, going the other direction here. And December new crop cotton up 157 points at 123.64. Now, I just got off of the wire here, Brian, with some delivery intentions this morning. I want to get your thoughts on these numbers. Now, remember, we didn't have much posted last Friday as we had the first notice day here on the May contracts. This morning, this is what we have. We have Chicago May wheat with 968 contracts posted for delivery. Kansas City wheat, 100 contracts posted for delivery. Well, that's quite a switch from last week. Rough rice, 83 contracts, and 37 contracts of oats were posted for delivery this morning. Can you explain what that means?
The wheat numbers are larger than what we saw on Friday morning. And, you know, notice that we don't have corn, we don't have soybeans, soybean oil, soybean meal deliveries. And that's really the key takeaway, I think, is the fact that those 4 markets are in a little bit tighter stocks and situations. So we're not going to see any deliveries because of the strong cash markets. It's wheat, you know, a little bit to an extent rice and oats, that the cash markets just aren't as strong. And that's why we see these bigger deliveries. Minneapolis had 11 overnight. So not a huge amount there, but again, tight stocks in Minneapolis because of what happened as far as our production last year of spring milling wheat in the U.S. and Canada. Just much tighter numbers, much tighter cash markets, and that's definitely reflective of the deliveries this morning.
Now, if we look at the U.S. dollar index overnight, of course, that can have an impact on the wheat as well. And wow, we had June futures up 542 points yet again all the way up to 103.505, and you add that together with those heavy deliveries of over 900 contracts on Chicago wheat. One has to wonder what kind of a day we're looking at here. Brian will come back in a moment, and we'll discuss our livestock trade on a Monday when we come back. Well, we're back talking with Brian Hoops of Midwest Market Solutions. We're going to talk about livestock now. So what's the situation now in the cattle market? We didn't have anything as far as cash cattle trade late last week, and I just wondered what the scenario is for the setup this week here, Brian.
Well, the futures market has really sold off compared to where the cash market is. We ended the week around that 140 range, maybe 141 in some areas. But look at the June futures, a huge discount to that as the market's anticipating the packers will be able to pull captive supplies ahead and rely on that, and that's going to weaken the cash markets. When they do have to bid for the cash, it could be steady, maybe even higher this week. In the futures market, it really oversold, I think, and should rebound in here. So we had a really big kill week again last week, over 650,000 head, and that's the key. If we continue to see that type of slaughter pace on a weekly basis, there will be needs for the packers to buy cattle out in the open markets, and that will support the futures. So a lot of the fundamentals are positive for this cattle market. The boxes continue to slide. That's a negative, of course, but steer weights did come down a little bit last week, and I guess we'll take a wait and see approach of what the show list numbers are giving us. But the fact that the June futures are so heavily discount to the cash and for where April went off the board, they're likely to see some sort of a bounce, and that's going to be led by feeder cattle with corn prices working their way lower so far this morning.
Well, on the June live cattle, we wrapped up the week on Friday $1.25 lower at 132.65. If we look at those feeders that Brian just mentioned here, we'll go with that May contract. It was down $1.60 in the August, down $2.12, Brian. It finished at 168.27. Is more of the volume in August now or not?
Yeah, most of the volumes into the August contract, May delivery, there's no deliveries on feeder cattle, but at the end of the month, that market will go off the board. So, yeah, August is kind of the key, what the trade is focusing off of right now, as the May contract is more in line with what the cash markets and the feeder cattle index will be doing.
And let's look at how we finished up on the lean hogs. Here we had the May contract down 307, and wow, the June lean hogs were down 460. Not quite a limit move down on Friday, but pretty close. Is that going to lead to follow-through selling today?
Yeah, I certainly expect that it would. That was, like you said, a real poor technical close below the lows of April, new lows for the month on Friday. And once we did that, we took out some key support, closing at the lowest level since late January for those summer month contracts. So you're likely to see a little bit more pressure, some follow-through selling coming into this market before we can see some sort of a rebound or a technical bounce.
Oh boy, could be another crazy week. Well, thank you, Brian, for talking with us. Appreciate it. Brian Hoops of Midwest Market Solutions. Janet, we're ready to begin at the bottom of the hour.